Carol Hazel with Carol Hazel Real Estate, and I'm here today with Bob Smith of Columbus Capital Lending. And we were just discussing the do's and don'ts for people that are getting ready to purchase a home, how to get prepared for that, and some of the traps to avoid along the way, because financing is definitely not the way it used to be. It used to just be able to fog a mirror and the home would appraise. Well, guess what? Today is a new day, and there's a lot of scrutiny, and appraisals come in right at value, sometimes under, because there are not enough cash sales that have supported the uptick in the values of the homes. So we just kind of want to go through some of those things. And Bob, first, what would you say for people, someone that's getting ready to buy? What are some of the most important things for them to do?
Well, really the most important thing to do is really to get your financing in place, and that's by talking with a lender. And once you get that pre-approval and you talk to that lender, I think one of the biggest obstacles or changes that we're seeing in our market right now is banking. Banking is very big, and a lot of people don't understand that right now.
Because they're going to ask for your last 2 months of
60 days of bank statements, or your last 2 months of bank statements. And really what they're going to look for is not so much about what's going out, but they're looking at what's going in. And if it's not just your payroll, they're really going to dissect that. They're going to want to know where those deposits are coming from, who they came from, and why they're in there.
Because a buyer could think that it's a positive thing that, they got $500 from grandma for their birthday and they threw it in the account. They would think that would be a positive thing, but actually, that throws a kink in things.
It definitely throws a kink in things, but it's things that definitely we can work through. It just makes the process a little bit harder. But those are things that up front that we would make sure that you know that you're banking. Again, any deposits that are going in, speak to whoever gave you that pre-approval. Speak to your lender. Say, hey, I got this. It is my birthday. I did just get a $500 check. How do I do this? Hopefully, what they'll do is they'll guide you of making a copy of that check. It is from grandma, and we'll already know what your birth date is, so we'll be able to put those two together, and it should make sense. Worst case scenarios, they may expect a gift letter from grandma. It's okay.
So it's really about sourcing. They want to know the source of the deposit.
Absolutely, and just keeping it clean. Make sure that there's if a lot of people keep their money in their savings, and they keep just enough money in their checking to pay their bills. Every once in a while, their checking will dip below, and we'll get an NSF. Not good, because now we have to explain that NSF. And if there's too many of those, well, that could cause some problems on the underwriting.
So no NSFs, no late payments, no big deposits that are not fully documented.
Sure.
What about withdrawals?
No.
Not that so much?
Not so much about the withdrawals. I mean, the only time that we're going to see a problem with the withdrawals is if it looks like, really, if we go in and we show we have 2 months of a withdrawal going to, we'll say ABC Warehouse, whatever, and also, but there's no ABC Warehouse on the credit report. So now they might go, okay, now what is this? Is this another debt out there?
Loan?
Is there another debt or loan?
Okay.
So as I say, what's not, what going out is not important, but it is. But those are things that we don't run into that often. But they could be. So, but those are all things that they're gonna, from top to bottom, they're gonna be looking at banking and to make sure that it's clean, as we call it, clean banking. The best type of banking is just payroll deposits going in. That's it. So that's what
makes sense.
Yeah.
What about a lot of people? I've had buyers where they didn't think that they would. They're like, well, they had a short sale or foreclosure or something in their past when the economy was really bad, and they think that they will never be able to buy again. And really, it's much shorter than that. It's
on our government loans, on our FHA loans, for instance, 2 years on a bankruptcy, 3 years on a foreclosure. I get them so often where I get young borrowers that come in and really they come in and go, Bob, I really don't think I can buy anything, but I really want to sit down with you and tell me where I got to go. They're surprised, like on an FHA loans, 3.5% down. They've only heard, oh my gosh, I got to put 20% down. I got to save 20%. No, you don't. There's 3.5% you can put down. If you're a veteran, 0. We got programs out in this area. Some rural developments. That's a 0 down program. So there's
plus you can ask for seller's concessions. What that is for example, if you put in a bid for, let's say, $300,000, and then you asked for 3% in seller's concessions. What that is your offer is actually a net offer of 3% less. And so you're getting that 3% of help towards your closing costs, not your down payment, but just your closing costs. So that can help, but you have to be careful of appraisals. Because then that extra 3% is in there, and if the appraisal's really tight on the home, you can run into the home not appraising. So you have to be careful with that.
And the confusion on that sometimes too is that they think that because the seller's giving them 3%, that they're physically going to have $9,000 in their pocket at closing, and that's not
just
how
covering costs.
It's just covering costs. It's going to be a wash at the end, so it's not a physical number that they'll have in their. It's a paper swap, so it's not really money you'll have in your pocket. It really will, because it's $9,000 less you'll have to bring to closing.
Yeah. So it is. It's a raise in a way, but you are financing it basically. Correct. Yeah. And in this day and age, with the market being so hot, I mean, I'm running into multiple offers. We go to put a bid in. There's other people up against us, and
I'm running into what I'm seeing too is really some of my Michigan borrowers that are moving down, or even out of state borrowers that are moving down. They're coming in, and again, let's say it's a $300,000 purchase price. They're coming in with a $290 offer. And in this market right now, that's just not, and I don't want to ever try to push them to go higher, but I have to always educate them to say, it's only been on the market for 1 or 2 days, you're $10,000 under, and you want seller help? Not going to happen.
Probably not.
Probably not going to happen. So.
Yeah, and they really have to be pre-approved before they put that offer in. Be pre-approved. Make sure that you've gone through all the buyer's docs with your agent so that you understand what you're signing, because you may have to pull the trigger really quickly on a multiple offer situation. And then also, you got to put in the bid at your walkaway price. Like, what price are you not going to kick yourself to walk away? And your agent is going to run comps for you to make sure that you're not overbidding, because that can tend to happen in a multiple offer situation too, and then it won't appraise.
And if you really looked at, and if you're trying to save $10,000 to get this home and possibly lose this home, with the interest rates as low as they are today, $10,000 is very small in a monthly payment
over the time.
Yeah, so it's like, do you really want to lose that home over $50 a month or whatever it's going to be because of you trying to go to a lower bid on that? So I would just be, and as you said, to get to multiple offers in, I would ask, as a borrower, ask your lenders if it's possible for them to run your file, what's called through DU, or desktop underwriter, because what that would do is that would give me an actual pre-approval from Fannie Mae that I've used before as to make your offer stronger. We actually have the approval through Fannie Mae that you can submit with the offer, and that could definitely help.
Anything that gives you an edge. And if you don't think that you qualify, you're embarrassed or whatever, you know what? Bob has seen it all. And both Michigan and Florida suffered huge losses back in the day, and we've both seen it all. And so if you just get with a lender, and then and find out what the scenario is, so that you know how to move forward. And they have programs where they can help you, improve your credit. They have vendors that they use to improve the credit and give you pointers.
We just have a team on staff that'll do that. That will I'll be able to analyze your credit, see where it's weak, see what needs to get stronger. I mean, there's sometimes I've actually had people that their credit was low just because we needed to add debt, which sounds not add debt, but maybe add go out and get a credit card.
Because they needed more credit.
We needed more trade lines to establish a better credit score.
Sure.
I'm not saying that I say go get a $300 trade line or availability. That doesn't mean you put $300 on it. That means go put gas on it once a month and pay it down.
Because you were saying that could make a 30-point difference or more if you're if you're going too close to the top end of what your available credit is. You might be using your credit card perfectly fine. You just might max it out, pay it off, max it out, pay off. But that plays with your numbers, it plays with your score. And so if you can keep it down below, what'd you say, half or so?
50% is the first number, but if we can get down about 30-35%, it's ultimate, but 50% is that first number. And if you do, a lot of people do that. They will go and they'll max out a credit card, and then they pay it off, and they go, I don't understand this.
They should have good credit, right?
Well, what you don't understand, that's a when you run a credit score, that's a snapshot of that moment. And if you have a $3,000 availability and you got $2,800 right at that moment, your credit score could fluctuate 30-40 points just because you got that maxed out. If we would have waited maybe a day or two, these are conversations that we should have with you, a borrower, of if that's what you do, let's wait till you make that payment. let's get that paid down, and then we'll run credit. Hopefully credit will be higher at that point. Again, it could be 30, 40 points higher at that point if we run at the right time.
Right. Well, this is great information, and I hope that you guys got a lot out of this video, and it helps you, get closer to your goal of buying a home. And again, thank you, Bob, from Columbus Capital Lending, and just hope you guys have a great day. Thank you for joining us.
Thank you.